Hello everybody, welcome to your TraderMerlin show, your Tuesday edition, the 28th of April, getting near the tail end. It's been an interesting one to be sure. And we had some great markets out there today as well. Hopefully you guys made some money in these markets, some good trades. It was funny, on yesterday's show, I was talking with Brandon Wendell about how I had some oil long, and he's always like, why are you long oil? Boy, I tell you what, last night in this pre-market was scaring the hell out of me the way that thing was moving, and then just all of a sudden rallied back up and ended up doing it well today. I'll tell you about some of my trades as we progress through today's show as well. Now, one of the things I've been trying to do is accommodate you viewers. Obviously, I love talking about the markets, and I'm surrounded by a lot of guys and gals who love talking about trading and investing as well. So I've asked you, who do you want to see on the show? And I'm doing my best to bring on specific guests that you would like to see. Today, after I do my opening segment here, Jeff Manson will be joining us. We're going to talk about Fibonacci. And Jeff was a request from many of you. If you'd like to see a specific guest on the show, you can actually type it down below the chat on the YouTube videos. That's the best thing to do as far as helping this channel is click that subscribe button you see on your screen. What's the best thing? iTunes, subscribe to the podcast, click the subscribe button on YouTube, and also comments down below the video help out tremendously. So go ahead and type in whoever you'd like me to see or interview, and I'll do my best to get them on, and we'll have Jeff here in a little bit to talk about Il Fibonacci, some mystical numbers out there in the world. All right, enough about that. Let's get on with the show and start things off with the top markets out there, not necessarily our top 7. I will start at the bottom and work our way up. At the bottom of the list here, I've got the NASDAQ. Yeah, you guys see the NASDAQ 100 here. We talked about this yesterday and how it has this nice little peak going all the way back to the 17th of April, also coming very near that 9,000 mark. So this was a great opportunity for a potential double top. Today, it smacked its head on that NQ. When that happened, I actually went short on the ES. I've just been doing a lot more trading on the ES than I have the NQ. Made a phenomenal intraday day trade, closed that one out after a few hours for a nice profit, but it was based off of the NQ coming into supply and also these markets coming into some nice whole numbers. That was your worst performer on the day, as you can see, down 1.42%. But why is it? Why did you see that do so poorly today? Well, it has a little bit to do with earnings. So I'll bring up your earnings calendar here. That's for tomorrow. This is what happened today. Google was ugly all day long, as you can see the top of the list. That was our popcorn trade of the day. Google missed by 10% on their earnings announcement. So I'll show you what that looks like in the after-hours session because it was rather interesting. We'll go GOOG. I'll bring up a 5-minute, and you guys can see the volatility. Look, this is the Google for the day. Pretty ugly, sliding about $50 during the trading session, but it's really what happened after hours. Remember, they missed earnings. And lo and behold, big spike to the upside. This is why I am just adamant that you should not be trading earnings. It closed at 1,233. Now it's at 1,281. So sold out $50 during the day and gained it all back in the after-hour session. Gotta love it when you miss earnings and have a big rally like that. All right, next on the list is your S&P 500. This is the ES on a 5-minute. Because we're looking longer term for this type of stuff, I'm going to put this back to a daily. You can see we've got a great shooting star on the S&P 500. We came right into that 2,900 mark on the S&P 500. So I'm liking this as a potential short going forward. As I mentioned, I did day trade this and just pulled a little scalp out of it. Really shorted right as we opened up in the morning after a very, very powerful move pre-market. Pretty much sold off the remainder of the day. That was the ES. Moving up our list into positive territory, I've got gold. The chart doesn't look very golden, does it? We've got a really long-legged doji there, big spike down, but basically just slightly up on the day, finishing up 0.03%. The 10-year bond was next. Now, what this means when you see the 10-year positive like this, it means that the bond prices were moving up, which means yields were falling. They were actually down 7% on the yields, going to 0.61. And I do think you're going to see this challenge, this 50 basis point mark that we saw all the way back on the 9th of March. All right, we had Bitcoin was up 0.39%, finishing, well, actually right now it's at 7,780. I have the Russell 2000 was your best from the index perspective. Like we said yesterday, it's looking the strongest, had a breakthrough again today, up 1.62% for the Russell 2000. And finally, El Crude Oil, looking decent today, at least showing some semblance of stability. Was 3.83% to the upside. What I want to show you, though, is the after-hour session here. Let me just show you last night so you guys can look at this and see why maybe Merlin was a little bit nervous last night. Here's what you had. We closed it right around 13 bucks. And all of a sudden, this thing was down sub 11. It almost got below sub 10. It was 10.07 was the low on that thing, and by the time we opened up again this morning, we're back almost to where it closed out yesterday. So all in all, big swings out there in crude oil, but this chart right here looks rather positive because it's making higher highs and higher lows. So all in all, very positive. All right, big shout out to Ash out in Nashville, Tomasina in Arizona. I hope your sister's doing better. I'll get to Steven's question about Fibonacci here as well. Hello, everybody. I've got Tom and Kev and Big Ab, Walter, Natalia. Thank you for all the questions and comments. Kevin, also Sam, Alpha Intelligence. You guys have a ton of big group following out there. It's almost becoming challenging for me to say hello to everybody on this program. And yes, Batista, I think we did see a shooting star on the ES. All right, let's not spend any more time doing the housekeeping pieces. I don't want to keep our guests waiting. I'm already 6 minutes in, and I just want to spend as much time as possible with our guest today. Joining us on the phone, we have Mr. Jeff Manson joining us. Jeff, how you doing today? Uh-oh, unmute your mic. I think you got to unmute your mic. Yeah, he's got his mic muted. There it is.
There we go.
How you doing, my
doing
friend?
Great. Doing great. It's nice and warm, getting warmer out here, getting up to the triple digits out here in Arizona.
Yes, it's funny because we have a heat wave here in Southern California. It looks like it's going to be pretty much about 80 degrees all week. I'm very excited as the viewers will follow. I try to stay out of the sun because I have vitiligo. You guys can see my fingertips are kind of bleached and I have little marks from vitiligo. I still will be going out in the sun, and you'll notice over the next week or so, I'm going to get progressively darker and darker and darker because of the sun and being out for my walks every day. Jeff, it's been a long time since I've had you on. Previously, when I was doing Power Trading Radio, you came on rather frequently, so I wanted to start things off as I'm doing with every guest and really doing a quick little profile of an instructor to find out a little bit of the basics so new viewers understand who you are. So let's start with our trader profile of Jeff Manson. Real quick, tell me a couple different things here. I want to know 3 things. Number 1, how long have you been trading? Number 2, what instruments do you like to trade or do you trade? And number 3, what's your trading style?
Well, number 1, I got my start right around 1996. I was just recently talking with one of my mentors in the back from that long ago, almost 26, 23, 27 years ago. I was just talking with him last week, so it was really kind of fun to catch up because I haven't been in contact with him for so long. What was the second question? I said I kind of
number 1 was how long you've been doing this, Is it a year, 20 years, 80 years, And number 2 is what do you trade, like your active daily trading?
Well, I really like something that's moving. I'm always a student of the market, and as I'm every day trying to critique my trading style, I tend to look at smaller time frames. I look at things that are liquid, that are moving. I've been doing a lot more Forex as of recent. We've been getting a little more movement in there that I like to see as far as the organization of the charts. Mm-hmm. Actually doing quite well with that. Futures I like, and I've been doing stocks. And I realize that in this market condition that stocks and options are one of the best products to be trading right now because of the volatility and selling that premium and stuff. So I guess I'm a student and still a student and a trader of all asset groups, but mainly I focus on futures, Forex, and options on futures.
Yeah. All right, cool. So you trade pretty much everything, which I think the longer that we do this, that seems to be the norm for people who really are trading for a long period of time. I was a one-trick pony when I started. Now basically wherever I see the best opportunity is where I'm going to go. Last one on that list was trading style. You kind of hinted at it, but a little maybe more clarity. You said, are you kind of like short-term intraday trader?
I like the short term. I'm always a believer that if you can trade live in front of people, then your credibility goes up. If I can see you call a zone and it price turns at that place and goes to where you're saying in real markets, I do like the shorter term time frames because of that. And I always want to keep proving that what we do as traders in the market really works. And there's different strategies and such and how we put things together, but to show the visual proof is what's important to me. So yeah, primarily smaller time frames, but I do have a lot of larger time frame charts that I'm organizing and keeping and monitoring as I go on a day-to-day basis too.
Nice. Well, there's your trader profile for those of you who want to know a little bit more about Jeff Manson. Futures trader, Forex, stocks, options as they need to be traded, finding opportunities in all these different marketplaces, and ultimately been trading for a long time and more shorter term. But I think you're a lot like me where I will start off with normally what is a shorter term plan trade, and then if things start to move, if I get that momentum and things shape up, I could stay in things for months if that trade continues to move in my favor. And I don't want to pigeonhole myself into pigeon my hole. That was a good one. I don't want to pigeonhole myself into saying I have to be a day trader. I'm very flexible, and I think you are as well, from what I've learned.
Yeah, it's and we're in such extreme market conditions right now that we're used to it. We were trading in the Y2K, and the world was going to end back then. At that time too, and yet we were in the biggest bull market in history we saw during that time. And of course, after it, we've had quite a few years of volatility and things like that. So this is right back to the good old days, and that's why I made the comment. Stocks and options were one of the better products to trade back then, because that was kind of the main game in town. The technology still wasn't there like it is today. So, stocks and options are still, in these market conditions, one of the better opportunities. But you have to take profits.
Yep, absolutely. Real quick, we had a question coming in from Alpha Intelligence. Says, is he quitting OTA too? No, he's still doing XLTs for OTA, guys. So no, not quitting there. Other question came in from Christopher Lee. Says, what pairs in Forex are you looking at? Do you have... I think this might be kind of interesting because, you got a pretty diverse group of assets there with Forex, and some people really narrow it down to specific things. Do you have a couple that you like to focus on?
Well, I'm still a student of trading the Forex, so a lot of it is technical. I can tell you right now I'm approaching a zone on the GBP, JPY. Also in a trade at the Aussie USD, coming out of a small supply zone around a 120 or 240 minute chart. I'm noticing as I'm watching multiple pairs that there are certain pairs that have been correlated with the equity index, and also ones that are inverse correlated. So I've been looking generally for those correlations with markets I'm familiar with, and seeing which ones are moving up when the S&P is moving up, which ones are moving down when the S&P is moving down, and also kind of seeing that, what is the dollar doing in relationship to the indexes. One of the things you pointed out was the in your opening statements about the 5-year, the 10-year, and the 30-year bonds and notes. They were moving up today as the market was moving down. I think these markets are starting to get to that stabilizing place again, because when in a normal market, we noticed when the bonds go up, markets go down, and vice versa. Okay, and when the dollar goes up, the market goes down, the euro goes up, and so on. We're starting to see some of those correlations get back in line, and that does take a little bit of time to do, because they've been so far over the last 2 months have been way, way, way out of whack.
Yep.
So some of those correlations are coming back in. So as specific pairs, it really doesn't matter to me as long as it gives me a setup. But looking at the correlation between the equity indexes and those Forex products to see if they're inverse or correlated has been a great decision support tool.
Right. I think that the challenge here for many is that there's so many different things to look at. There's you're looking at correlations, you're looking at Forex, I can see some people here talking about looking at the dollar index, there's all these factors. So for those who are starting out, I don't want you to get overwhelmed with it. I would say start off with something basic and focus on that. Understand basics of supply and demand, understand where there's a higher probability of things turning, and then build on that. And some of the things that Jeff pointed out are designed to give a little bit of an extra odds enhancer, but again, nothing works all the time. And kind of pointing out to what Sheena mentioned here, yes, you have to whatever anybody says about the market, whether it's myself, whether it's Jeff or Brandon Wendell, anybody, you always have to do your own analysis, right? Jeff's thoughts here are his analysis and his opinions about the markets, and they may not always work out as trades. That's the beauty we have as investors and traders, is to be discerning enough to make those choices ourselves. Let's go to the topic du jour, which was Fibonacci. Fibonacci is a mystical thing. I actually was going to try to bring up a PowerPoint here that I created years ago to show where Fibonacci is in our lives. And for the people that don't know, Fibonacci is basically, it's based off this sequence of numbers, which is 1 plus 1 is 2, 2 plus 1 is 3, 3 plus 2 is 5, 5 plus 3 is 8, and then the list goes on and on and on and on. And when you divide these numbers by each other, you get what's called the golden rule, the golden mean. And we see it in artwork, we see it in the human body, we see it in nature. It's unbelievable where this sequence shows up. It's almost uncanny and mystical and spiritual at the same point, where you go, it's voodoo, right? This can't be right. You like to use this in your trading, and I thought it might be interesting because I know a lot of traders who do use this. Some thinks it's just hogwash and garbage, but I find some validity to it myself in my trading. So walk us through maybe how you use Fibonacci, what it means for you, and if you want to use charts, let me know what you're looking at, and I'll draw them for our viewers out at home.
Okay. Basically, using Fibonacci is just another technique, and it's a technique that well, even with many of my peers, they have shied away from using this because they can't seem to make it work. One of the key things that I've used in Fibonacci measurements is having a very specific quality zone, okay? And many of you have been around me and you know that I have very specific candle formation, which is part of my trading plan. And once I have that candle formation, then I can place a distal and proximal line. Mm-hmm. The distal line is where you hook the measuring tape, distal to rally or distal to drop. What that did for me, having a very qualified zone, was tune me into some very specific chart patterns, okay, that were very consistent when I had a quality zone. For many years, traders would use peaks and valleys, which were still subjective in many ways, and they could never make Fibonacci measurements work, especially work in a sequence when one hits a specific Fibonacci retracement, then it goes to the next one, and then it goes to the next one. It's like a storybook that lays out when the banks and institutions are really building this. So let's just say that Fibonacci is just one technique. Now I can use GAN, I can use speed resistance, I know support and resistance, trend lines. The bottom line is all price changes direction where there's an imbalance of orders. Okay, plain and simple. If more buy tickets and sell tickets, price changes direction. More sell tickets and buy tickets, price changes direction. Those points are reference points to help us. But when we know multiple techniques, okay, it's all about how many people are thinking the same thing at the same price level.
Right.
Fibonacci measurement fits along with the way I process information, that computer thing up here, okay? I want proof. I want it to be mechanical. I want it to work both in price and in time. I want that symmetry and the geometry behind it, which is my decision support tool, okay? It helps me gauge my risk. It also helps me project where my reward is and the path that the price will follow, all things being equal. And the mechanics of using Fibonacci and specific measurements are just that. They're very mechanical, very specific. If I'm looking for a zone entry per se, I would use a Fibonacci retracement, which is, we call it the 88.6. So first click goes on the distal line, second click goes on the rally, so distal to rally. And then I'm looking for price to come back into that zone, and I'm looking for an 88.6% retracement of the prior swing, okay? Now, to get the 88.6, you're gonna have to get to the square root of the 0.618, and I just really can't get into that.
You're geeking out on this over there.
But the mechanics, and sometimes people want to dig into why everything happens, okay? I don't know why it happens. I just know when the measurement's there, it helps me make a decision. That's it.
Yeah.
Okay, and so does support and resistance, so does news, economic, political, time of day. All of those things play in. I find very specific price patterns that fit that geometric shape. Okay.
Do you have anything in particular I can bring up and maybe draw for our audience that to walk us through kind of a visual example, because they're asking for it?
All right, I do, and hold on.
No worries.
I had one. I think it was on we go right back to the S&P. Okay. So the ticker symbol would be the ESM20.
Okay, bring it up right now. Let me. I have to remove some stuff on the screen. You guys can see here. I've been doing a lot of trading on the S&P. Let me get those trades off the screen here, guys. Oh boy, I got a ton of trades going on. All right. Okay, back to where we were.
Okay, let's bring up a 3-minute chart.
3 minutes. Okay, wow, you're getting down there. I normally, for me, 5 is like my low time frame. Cool.
Well, again, I'm looking for that pattern in shape, and if you see that recent drop where we had from where you shorted this morning up around 29.10, and then you rode it all the way down to that 28.54, you have that strong move down, and then you have a bounce up, and then it came back down and retested. Kind of looks like a double bottom.
Right.
Okay. Now, I'm looking at my charts as well. If we use and I base all this based on the close price.
No worries. I've highlighted that double bottom there just so everybody can see what Jeff's talking about there. I've got the double bottom marked out for you.
That first low, if you're looking down at the bottom, you see that there's a green leg candle that closed within the body of the red candle on that, either try a 2-minute chart.
Okay. Yep.
And then if you use lower that the candle, which would be the distal line, the low of the green candle, and then you place your proximal line at the top of that green candle that's inside the red one. And we created a zone.
Yep.
Okay, so the distal line, okay, if you click your first Fibonacci line at the distal, and then you go up to that high point before it went back down, which is roughly about 28.76, 28.75.
Yep.
And then you modify your Fibonacci retracement tool, and you just take everything off except for that 88.6% retracement. You can see the price came right back into that zone and did not close below it. Okay,
I'm adding that one in. Hold on, 88.6.
Yeah.
Got to do on the fly adjustments. Okay. Yep.
Now, what this does for me in a couple different ways, if you draw the move into that demand zone, and then draw a trend line on the move out, and then another trend line going back down to the low where price changed direction. A couple of different things occur here. You start to see that there's a price pattern there. Now, in textbook term, this is what they refer to as a double bottom. Okay?
Yep.
Little elaborate double bottom with a higher swing low. Okay? Going back to the days when back in the olden days, okay?
Yep.
This thing has been repackaged so many times. Now, if you see that measurement, the 88.6, that was the price point in where I was looking for price to enter the trade. My protective stop would be going down just at or below that distal line. Because once price even violates that distal line by one tick, if I try to get out of that trade as fast as I can.
Right.
Okay. If it violates that zone by one tick, then it's not going to work. Okay. At any rate, the next move up, going from that low point of that, and you can take your Fibonacci measuring tape now and go from the rally all the way back down to the low point at that 28.55-ish area. Mm-hmm. And if you add a Fibonacci extension of either a 113 or 127, okay, I went right dead nuts on that 127, okay. So what this does is it allows me to kind of get a couple of different places where I can anticipate price to move. Okay. Now the Fibonacci doesn't only work in price, but it also works in time. So if you were to take the drawing tool from, assume you're using TradeStation, is that correct?
Yep.
Okay, so we got 1, 2, 3, 4, 5, 6, 7, 8 down from the top. It said Fibonacci time extension.
I know the tools, my friend. I'm a veteran.
And if you go from the valley, or sorry, from the base to the drop, okay, or the retest area, you'll see that if I use that demand zone, the lowest point, the bar that went to the lowest, and then I use that that low candle or that low wick that retested the zone. If you highlight the 0.618, you'll see the price rallied right up into that 0.618
Yep.
and then pulled right back off. And it also went right up to that 1.618 and then pulled back off. These are two places, where we can anticipate in price and time using these Fibonacci measurements. Now, the journey getting from point A to point B is, that can be anybody's guess. I kind of like it when it follows my trend lines,
Yep.
It's more symmetrical. But, it can have big swings and volatility. But the measurements help me project to the right side of the chart, both in price and time. And this is how I've learned to look at the symmetry in the market. And, of course, correlating this with the time of day, when that zone was created, when the zone was retested, volume, all of those play a part in my decision making. Okay, if I'm using a tick chart versus a time-based chart, that also makes it helps me make a decision. Whether it's tick or volume-based, would start to tell me the activity or the frequency that the market's trading in.
Let me real quick just to go over this chart here, guys. There's a couple different things I want you to notice. He was talking about this 0.618. Now, I'll be honest. I've done a lot of research and study on these extension or timelines, and I always felt that they were voodoo, hocus pocus. But that's what I think doesn't matter. And this goes back to some of the comments. I think Kevin, you were mentioning this one. Part of the allure of why this stuff works is because you have the masses looking at it, and there's this element of quote unquote self-fulfilling prophecy, and that's the same with MACD, stochastics, Bollinger Bands. Although I find a little bit more interest on myself with Fibonacci because of the relationships and how we see it in everyday life. I mean, it's literally everywhere you look, from the lengths of your arms to the lengths of your the whole body structure. Your face structure is a Fibonacci ratio. Your body is Fibonacci sequence number. It's bizarre how it all works out. Maybe time permitting, I'll do a special show on that. But I want to show you the picture here that Jeff was talking about. Now, I know there's a lot of lines on this screen, but if we played hard right edge, right, and you just kind of went and you saw price rallying up, there's a few places in here where I think price may actually stall and turn if I'm looking at this picture right now going forward. You've got obviously this high that goes back to, let's call it 2876. You've got this interesting one right here, which is just before that at 2873. And of course, you've got this guy right here, which is real aggressive at 2872. So I'm already anticipating it going there. And now Fibonacci, those timelines, just happen to coincide. I don't know whether you want to call that divine intervention, just straight Fibonacci, or luck. I believe that there is some element to this natural wave and shape of pricing. And I just wanted to bring that up because some of you are probably thinking, wow, it turned just because that's 618. No, it turned because of other factors, but that was just coincidentally a 618. To me, it turned because of supply, but we could make the argument that it was also Fibonacci traders using timelines. So, Jeff, you mentioned that you're using retracements, extension, timelines. Look, there are a ton of different... I was showing that screen, right? I think I was showing the screen, everybody. There's so many different, I don't know, what do you want to say, bastardizations of Fibonacci. You've got Fibonacci arcs, which I think are probably the dumbest thing ever created by mankind, is Fibonacci arcs. Real quickly, let me just delete these lines, and I'll show you guys Fibonacci arcs here, because every time I see them, I laugh out loud. So Fibonacci arcs, another tool here in TradeStation. You've got this little tool here. You click on it, and then you go, okay, well, I'm going to measure that move. And then you're saying, okay, at some point, it's guaranteed to hit these arcs. It has to hit the arcs at some point. So you've got arcs, extensions, retracements, timelines, spirals, fans. I mean, how did you filter through all of this garbage? Maybe not garbage, maybe a bit too harsh. All these different tools to find out the ones that you liked to use. Because I know you're using extensions, retracements, and timelines.
Well, and you know what you see when we kind of drew the symmetry on that, when we had the base to the rally, we had kind of a two horizontal lines there, right? And then we had our timeline, which was a vertical line. Now, if you put your arcs from the base to the rally, you'll see that it kind of forms a triangle.
So say it again. So from the base to the rally, okay.
From the base up to the rally, from 2854-ish to up to 2876.
Yep.
Okay, you'll see that the outer arc, the 1.618, correlates with the timeline. It correlates with the another supply zone that's right in that same area. Okay, so again, just as you were stating, it's just multiple techniques lining up in the same area. It's how do these work? It's like a self-fulfilling prophecy.
Yeah.
But what it does is it accelerates a newer student's way of seeing that symmetry in the market with confirming that there is some order. Okay, so hindsight and forward looking, we can anticipate a place in price and time slope. Don't forget about the Fibonacci, the speed resistance, and and of course you got the Andrews pitchfork and all that other fun stuff that you could incorporate into this price structure. And it's when multiple techniques keep lining up in the same area, and it's really quite fascinating. And see, I know you back in the day and me in the day, we didn't have supply and demand when we started off with. It was all about indicators and oscillators and price pattern, because that has what been documented since back in the 1930s. I mean, that's the oldest books I have come from like 1923, 1937 and 35 in that area. They're still saying the same thing.
Yeah.
Okay. It's just that now we have technology to see it faster. We can reduce the time frame. I mean, we have charts that form in front of us rather than going to the library and getting the newspaper and getting a daily chart where you just get an open, high, low, and close. Make your own charts, so to speak.
Yep.
Okay. All those things are, back in the day, those studies, those techniques were designed for people to help visualize and forecast. Now, Fibonacci measurements and extensions, retracements can be a forecasting tool. Rather, we have indicators and oscillators that are based on past price action and a completion of that price action in order to make the indicator or oscillator work. So 3 different ways of looking at the market. When you're back testing, you can say, oh, when those 2 little lines cross, market always goes up until you place that trade.
The shoulda, coulda, woulda trade.
Oh, yeah. I mean, you remember the first time you saw MACD?
Oh, yeah. I was like, this is it.
It was it, you know. That was the most beautiful thing in the world. We went and tested it, hundreds of charts, hundreds of different setups, and every time it worked.
Yeah.
Until we did it.
Yep.
A live trade.
It's so funny. It's especially when you have somebody show it to you and it's like it always works for them, and as soon as I go to use the same friggin' strategy or same tools, it doesn't work. This has been the conundrum for me in trading since I got started, guys, and I don't understand it. I can't explain it. You can take 2 people and they can study the exact same thing, the same exact rules, have the same freaking mentor, and all of a sudden they go out on their own and do it differently, and they get completely different results using the exact same strategy. I will never for the life of me understand this phenomenon in the financial markets.
It's like measuring clouds,
Yeah.
But, using these tools and measurements does help a student progress through their learning curve. And knowing multiple different techniques on top of, and then where the supply and demand zones are, really kind of brings things full circle.
Yeah. Othniel says, tell Jeff Manson that my uncle, the unworthy servant, says he's cool and high. So there you go. I got to give him a little shout out there. You got it, Otho.
All right.
So Jeff, what's on your schedule? I know you're doing XLTs. Is there a regular session there that I can point people to? I know for those of you who are Online Trading Academy graduates and you're part of the XLT, Jeff does sessions there. Are you doing anything else?
Well, my cousin Chris and I have started a Facebook page called Manson and Manson, Two Cousins in a Chart. How original.
Nice.
What we're starting to do is just post our charts, setups. Chris has just posted a couple of out there the last couple of days on crude oil and things like that. And he kind of showed the before, during, and after trade and a little commentary on it. And we're going to start beefing that up a little bit more. Over the weekend, I'll be heading over to Nashville, Tennessee, to do a kind of a trading lab where we do basically Sunday afternoon after church and things like that. We kind of get together, we set up the room, we get everything organized, and we get prepared for what we're going to do Monday and Tuesday. And Monday and Tuesday is just kind of like a live in-house XLT all day long. We trade the markets, we prep for the markets, we do a little bit of teaching, and so on. But the whole thing is just to do live trades with an instructor and be able to ask those type of questions.
Nice.
You know, what do I do now? Do I take a profit? And so on. Kind of work on their trading style.
Yeah.
I do have, as I haven't mentioned this before, but you know, the zones that I've been using over the last several years, probably about the last 4 years, have very specific candle formation. And I've been documenting and tracking them. I use them in every XLT when I find a zone to draw. Okay, every one of my zones is pretty much exactly the same way, has the same parameters, a leg in, a base, a leg out, and a base, okay? And when I have those group of candles, I see this historically. Anytime I wanted to get in a trade, I look at that point and I go to the left and I keep turning down the time frame till I isolate that zone. And it's uncanny that group of candles is always there. Mm-hmm. But sometimes it's not on the same time frame that I'm looking at. Well, one of our, I have programmed that, and I'll be sharing that with the students in the Nashville class to kind of get their feedback on it. And cool. It's kind of like it does it for me. I mean, so my trading plan had to get to a point where a computer could replicate and that I could use that information to go back and back test which zones work best and kind of train my eyes to see that picture. Mm-hmm. One of the examples we were looking at today, it had a beautiful zone. Everything met the computer specs.
On what? What are you looking at so viewers can see it?
Oh, it was on like...
oh, I thought you were looking on your screen.
No, I don't have it on my screen just yet. But the zone was in the wrong location. See, the group of candles can form all over the place. Right. But where it's formed and direction of trend, of course, and curve, and in relationship to the other pivot low or pivot high, it must get above that and take out a supply or a demand. Okay, so we can see that also when the trade changes direction or flips, you know, okay, it took out this one, so now we're thinking short, or it took out this pivot, now we're thinking long. This is going to be a kind of a good training your eyes indicator that you can overlay on your chart. So nice. Once I get it kind of dialed in, because I have, you know, there's many different zones out there that we talk about. Sure. Oh, actually, we don't talk about. We just talk about fresh zones. But isn't there, you know, if I'm using that group of candles, there's a pending zone. Then there's a fresh zone, but then that fresh zone has to become active, right? And what activates a zone? Well, does it move out of and take out the prior pivot high or pivot low? Right. Okay. So now we have a fresh active zone, and we have pending zones, but we also have to see the zones that have been touched or tested. And for those, we got all different color codings for them to help a student see, well, this zone it's a zone, but it's already been touched twice.
Right. Now,
we
like colors.
Yeah, we like color.
Well, let me be fair. When that is done, I'd like to see it because, you know, this is one of the biggest challenges. You know, we've got almost 100 people in the room right now, and you could take 100 people, sit them in front of a chart, and say, okay, draw supply and demand zones. Mm-hmm. And everybody will come up with slightly different. I would be hard pressed to see if you had more than 3 people at any point identify the exact same, to the number, the exact same zone. Of course, if
Correct.
you're using snapping tools, it makes it a little bit easier, but it's challenging. And I think the main point I'm trying to get to here is we can all find a supply or demand zone, but they're all going to have different strengths and weaknesses. You know, there's characteristics there, which we won't go into this show. I don't want to take anything away from OTA. But there are qualifiers. There's gradients, two-way zone. And your eyes may real quickly look and see one and go, oh, that's a supply zone, clearly. Yeah, but there's one might be slightly above it that is just much more powerful for a specific set of reasons. And if you had a tool that kind of not picked out, but graded them for you, I think that'd be a tremendous advantage. So looking forward to seeing that one. So you're just right now just XLTs and working on that. You're active trading in that tool.
Yep. Just I've since all the things that have been going on, it's kind of reevaluate life and what do you want to do when you grow up type thing, and I've had such a wonderful experience traveling the world, working for our online trading academy, and I still have one class I believe that I'll fulfill when everything opens back up over in Dubai, and I'm really looking forward to that one.
Awesome.
Kind of roped into that one because he already bought the plane ticket.
I like Dubai. Real quick, that indicator, is it for a specific platform?
Right now, it is just for TradeStation. We're looking at the coding to do it on like a MT4,
nice,
and things like that. And again, it's not a tool to make trades for you. It's a tool that will train your eyes where to look a little bit better. Right. As you and I both, and you just explained it, students are not seeing the same picture. And we've got to get them to that point where everybody sees a zone for a zone. Yep. And they have a way that they can use the left-hand side of the chart and verify this over and over and over again before they start trading the right side of the chart. Yep. And it's not just about a group of candles, but we make that association. Is that group of candles there, and did price change direction? Now, if we do that enough times, then we start saying, well, there's some validity in that group of candles. And price did change there, so we start making the association. At the same time, we now investigate that zone. What was the move out greater than 2 to 1? Mm-hmm. Did the move out take out a pivot low or a pivot high? Was it located favorably on the curve or in the right direction of the trend? And as you start bringing those other decision support tools in, and again, so many people just want to focus on a zone because a stronger desire to make a trade rather than do it the right way.
Yeah. Yeah.
So
I agree.
The mechanics, just like using Fibonacci measurements and things like that, I had to make this mechanical for my own trading style and my own purpose for trading, and like we're all students of our own trading styles. Yep. Okay. As instructors, all we can do is kind of share what we do, but we know everybody's going to make it their own. A little tweak here, a little tweak there, and they may make it better than what we're doing.
Right. Yeah.
But it's always a journey in trading. And some days you go say, why did I trade that thing so much today? It was a kind of an inside day, and the FOMC meeting started, and yet I had a strong desire to make a trade today too. I just wanted to get one of those moves.
Right.
Make me a few $100.
There's an addiction to it, buddy. There's definitely an addiction to it. Jeff, tell you what. Let me know when you finally get that indicator done. I'd love to show it to people and see it. I'd like to see it myself, see how that works, because it's definitely one of the challenging pieces. So thank you for coming on. I hope you have a great XLT sessions. I know some of our students watching, or some of viewers right now are in that session. So hopefully and we'll enjoy that session as well. So thank you so much for coming on, man. I appreciate it.
Hey, thanks for all your time, Merlin, and everything you do.
Oh, thank you. Take care.
Bye-bye.
Guys, that was Jeff Manson giving us some insights into just Fibonacci and markets. I'm going to real quickly show you something that I do with Fibonacci. I do things a little different, and it's weird. I've noticed that as soon as I get off the phone on Skype, what happens right away is my microphones pop. So bear with me as I dial this down just a hair here. Let me just share my screen with you and show you my way. Not that my way is the right way. Again, most of you who have followed this show probably think I'm pretty much a simpleton. I am when it comes to trading. I try to keep it as simple as possible, not convolute myself with so much other garbage. Now, that said, there are a lot of indicators and tools which will help people. Let's take a peek at this chart. I had it up here on the ES futures just to give you an idea. So here is the ES on a 2-minute. I'm going to go back to a .D, which makes it a daily chart. And what I've done is I'll do it from a move. So for example, we had kind of a shooting star today on the S&P 500. I'll zoom out a little bit so you guys can see this. And I'm watching the chat now, so sorry, I was kind of doing multiple things earlier, but I'll watch the chat for this one. At this point in this big rally up in the S&P 500, I'm expecting there to be a turn. I thought we might see a little bit of a drop at 2,900. We have a shooting star formation today, which actually makes me feel even better about potentially tomorrow having a down day. I got to cut back to myself here on the screen and say, that said, I'm very concerned about them saying, let's go back to real life, quarantine is over, because I think you're going to see a big pop. So I'm going to be very cautious with the amount that I'm shorting. I'm still going to short, like this morning. I wanted short, but I'm going to be a little more hesitant carrying things overnight, especially over the weekends now, because I know that announcement is coming. It is a foregone conclusion, and when that happens, boom, you'll probably see a big spike. When that happens, I'll now be looking for more shorts after that momentum has slowed. So I do think you could see a sell-off here. Now, what's interesting about this is I just pulled Fibonacci from the very bottom, which goes back to March 23rd, to the peak we had today. And I put those fibs there. And what I did is I simply put lines on the major numbers. And I'll do them on all of them. So I don't use that 88.6 that Jeff looks at. And again, there's nothing wrong with it. It's just what we decide to use. I'm using these numbers here, which are your common fib numbers, or percentages, which are going to be the 76.4, 61.8, 50%, 38.2, and 23.6. These are measuring how much of this move gets retraced. So for those that don't know Fibonacci, you've got this move all the way up from the 23rd lows. If this market sold all the way back down to the lows, it would be a 100% retracement, just to give you an idea of where these retracements may be. So I go out here and I will simply delete, and now I have points where Fibonacci is lining up. Now, I know we have a lot of online Trading Academy graduates in here, or practitioners of supply and demand. I am a big practitioner of supply and demand. I believe that was a question that came out for Jeff, which is, what does he put his priority on? It's supply and demand number one. That's where prices will turn. If we can get the line up for that, that lines up with fibs, that makes it even better. So if you're looking at this chart on the daily, and you're looking for demand zones, without even having these fib lines, you could argue that there's a nice one. I'm highlighting them in blue for you. You could argue that the most recent one is right there. And that this one's not that great. It's really not good at all, honestly. It's this big sideways choppy action. But notice that those 3 points all coincide with Fibonacci. So, I'm definitely looking at this pulling back. And if I'm looking at a target for this, right, my target for the S&P, if I decide to short, and I'll tell you my shorting would be done off a close below this low. So basically, if it gets below 28.47, I'm looking to go short with a target of 27.35. And I'll probably exit just before it gets there. But I'm using it because of the demand zone, but also the secondary support that I'm getting from fibs. Let's say I would go short 4 contracts of the S&P. I might unload 2 and let the second half run down to this next area, which looks like it could go rather quickly, all the way down to 26.28. So all I'm doing when I use fibs is saying, does this line up with an area that I already feel confident that there's going to be a change or a turn in that price action? And these lines you see on your screen right now, to me, all represent logical points. Now, there's certainly strengths and weaknesses to each one of those demand zones. One is definitely much better than the other, but it's just a way for me on a high level to analyze price action and where I think things may be going. Hopefully that helped you guys understand a little bit better. I know we went through a lot of different things out there today. There's certainly a ton of ways to skin this cat with regards to indicators, and I actually have some friends who are using a lot of other indicators. And in the future, maybe I'll bring them on, and I've got a friend who just uses RSI. I've got another guy just all about stochastics. And some of you might hate it. Probably some of you today just turned off the channel because you're going, Fibonacci, who cares? Natalia writes in, confluence with supply and demand is beautiful, 100%. To me, the more things that I can get that point to a specific area or zone, the better that zone becomes for me. Granted, it's not guaranteed, right? That we've seen with these market moves that the best zones on earth have gone ripped through like a hot knife through butter. It happens. That's fine. That's what I liked about what Jeff said. He goes, hey, I'm using the supply and demand. I'm using fibs. But if it breaks down below these levels, I've got a stop loss. Wipe your hands and you're out. Done. Okay. If you have any other questions, feel free to send those on in. I did not want to have a 1 hour show today, but apparently it looks like we might have a 1 hour show. So let me show you what's got cooking for tomorrow. We have, conveniently enough, hallelujah, 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 a popcorn trade of the day again. Not only one, but you've got a double whammy out there for popcorn. That's right. You've got Microsoft and you have Facebook reporting earnings tomorrow. Facebook will be probably the more wild version of those. But remember, these are the ones that have been leading the S&P, the NASDAQ up. Now, if you're looking at the Dow Jones Industrial Average, you've got Boeing also reporting tomorrow before the market opens. So this could be very, very volatile. I didn't even mark Tesla down there. Why? Because Tesla would be what? That's another popcorn trade of the day. We've got a triple whammy. Are you kidding me, folks? I feel like a car salesman right now, but you've got Microsoft, Facebook, MasterCard, Tesla, AstraZeneca, American Tower, Boeing, Qualcomm. I mean, this is like the mother lode of earnings. I mean, this is what it's really all about. So pretty excited to see this happen for tomorrow. On the economic announcement front, I actually didn't pull up any economic announcements for tomorrow. Sorry. I probably should have done that for you guys, but I didn't. Let me real quickly just take a glance because I like to go and see what's happening every single day in these markets. Tomorrow, oh God, how did I not know that? Tomorrow? Are you kidding me? How did I not know? Tomorrow you have advanced GDP numbers, gross domestic product. We have been on an economic shutdown for 2 months now. Their expectations are, previous quarter was 2.1%. They're expecting it to drop to 4%. Well, I'm pretty sure that we will probably see a number that's worse than that. I mean, we're stalled on most companies. What else do you have? You have an FOMC statement and a Fed funds announcement tomorrow. I'm not expecting them to make a negative announcement. If they were, this all hell will break loose on... all hell will break loose for our financial markets, but I don't think that's going to happen tomorrow. Not quite yet. Other than that, not a lot of other macro pieces. I see 10-year auctions. We have crude oil inventories tomorrow, so that would be interesting. They're actually expecting those inventories to decline here for the U.S. Why? Because so many U.S. refineries or oil companies are shutting down, and we'll see a wave of bankruptcies coming out. Yeah, Fed funds tomorrow. That will be the more important thing. That's going to be at 11 o'clock Pacific time. Is that 11 o'clock Pacific? No, I got... Now, of course, I don't know why my computer is telling me that it's in a totally different time zone right now. No, all right. Is it really 11 o'clock? How is it telling me it's 11 o'clock? That was bizarre. All right. Yeah, you're looking at 11 o'clock for Fed funds announcement tomorrow. The 11:30 is the press conference. GDP comes out at 5:30 in the morning, which will already be priced into the markets by the time most of you wake up. And crude oil inventories comes out at 7:30, which will be 1 hour into the market. So if you're trading CL or UCO, as I am in, I'm still long UCO, by the way, just in full disclosure. You will probably see some pretty volatile moves. I will probably dump most of my position by 7:30 because I don't want to get caught in any whipsaw out there. All right, everybody, that will do it for today. If you like today's show, do me a favor. Click the thumbs up button. Go down and comment down by the YouTube page if you like to leave a comment. That also helps me out, and I will answer questions. Friday's show will be all about listener questions. Of course, liking the podcast and liking the subscribe button and YouTube page, that helps me out a lot. Tomorrow, I've got another first-timer. Corey Lane will be on the program, an absolute rock star, just a great guy altogether. Love having Corey on the show. He's never been on this one. He was on Power Trading Radio years ago. He doesn't come on very often, so I feel very privileged to have him on. It will be great to have Corey Lane. It's going to be an options-based show. Thursday, we're going to have Sam Evans on the show, and then Friday, I'll do all Q&A. So I've got a very busy week for you guys lined up. Again, if you have questions, comments, feedback, put it down below the video on YouTube, underneath the videos, or if you want to go directly to the TraderMerlin website, you can send in comments and questions there. You simply go there, click a little button, and it'll send a question to us, to us like I have a team, to me, and I will do all I can to answer those questions for you guys. That will do it for today's show, everybody. Thank you so much. Have a fantastic day. Be safe out there. It's going to be a wild one tomorrow. It's going to be a crazy day tomorrow, honestly, with the earnings announcements, the economic announcements, and just markets as normal. Buckle up. It's going to be fun. I'll see you guys tomorrow.